Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for the trading week of March 20th through March 24th, where we'll select our top swing trading stocks to watch. We'll talk about trade ideas relative to dividend payers. We'll also talk about some trade ideas and our strategies for using options. So again, stick around to the end and we'll talk about a variety of strategies, trade ideas where we can make money trading, succeed in our trading in the trading week of March 20th through the 24th. Welcome, MD, the Ricky Khan, John. Thank you all for joining us in the live chat today for our live stream. Glad to see you. Hope you're all doing well. So here's our Google document with our notes for part 2 of our weekly trading game plan for this week of March 20th through March 24th. Again, we put our notes in a publicly accessible Google document so you can refer back to them. These notes have bonus links to bonus videos, links to all the tools, resources we use. We keep these documents in a publicly accessible Google Drive folder, and you can find a link to this document as well as to that Google Drive folder containing the notes for our weekly trading game plans in the description box below. If you have not already seen part 1 of our weekly trading game plan for this week, titled Bank Collapse 2023, Don't Get Trapped, we would highly recommend that you view part 1, as that contains all of our market analysis, our trade idea strategies for this trading week, all the input data that goes into selecting our top swing trading stocks for this week, and also, again, our strategies, and so you don't get trapped in this Bank Collapse 2023. Also, as a bonus video, we talked about over the past couple weeks uranium stocks, and we saw yesterday how uranium had some positive momentum, even though the energy sector in general had pretty, negative momentum. And so we snipped out our strategies about how to find uranium stocks, how to select uranium stocks. And again, you can see that right now in this bonus video via the link in this notes document. And we'll be releasing that publicly as soon as we're able. So first we'll review our trades from the past week. The past week was pretty busy, pretty volatile. The first one is we'd had a position in FANG D. We got stopped out of our position in FANG D, pretty much break even. I'll show you, FANG D, the FANG stocks did decline at one point and then rolled over. And since then, the FANGs have gone up. We talked about this yesterday, the risk off flight to safety. They're using the FANG stocks as a safe haven. So again, we're not terribly interested in shorting the FANG stocks anytime soon until the situation changes. But we were able to get out of our FANG D position pretty much break even. We went long SOXS, which is the short leveraged ETF on semiconductors. We got in, you'll see on the 17th at 1842. Again, decline in the semiconductors, decline in tech in general should give us an opportunity with that short in the semiconductor sector. Welcome, Mighty Soldier Trades. Thank you for joining us. Glad to see you this morning. Hope you're doing well. And again, in a second, we'll jump over to Webull and we'll look at the charts for all of these stocks. Also, we sold the cash secured put on Tesla at the 120 strike price on the 13th at 205. So when Tesla was declining, we sold a put, cash secured put, and that's for the April expiration. So we'll see if we can buy that back cheaper. Tesla had bounced back up, so we'll look at buying that put back cheaper, keep the premium as a kind of self-generated dividend. Again, we'll talk about how selling and buying back puts is part of our option strategy for making money in the choppy market right now. Again, you can see in the video on the best uranium stocks, we have several that we picked out. UROI was one we had on our watch list. We went long on UROI on the 15th at 209. So again, positive momentum in the uranium stocks, and I believe that's now turned back up. Also, the major decline we saw in oil, we've been talking for a while. We like USOI. USOI is one of these monthly dividend paying ETNs. And I know it's a Credit Suisse one, and what's going on at Credit Suisse poses some level of risk, but I'm not too concerned. And you can see it pays a very nice monthly dividend. The next dividend date's the 21st. So we wanted to get a sizable chunk of USOI to collect that nice monthly dividend. And then we'll watch what goes on with Credit Suisse and oil to determine if we want to continue to hold that. Also, we've had a long-term position long in yen, which is China tech, and we've been selling covered calls and buying them back and generating, our own self-generated dividend against our position in yen. So we sold another covered call at the $60 strike price. It's a January of 25, so it's very long dated covered call. And again, we'll look at buying that back. And we bought this one back for a net profit of about $10.50 or $240 per options contract. So we'll be looking at reselling that again. So this was, again, a way you can generate your own dividends on positions that you're holding for a long period of time. And again, we'll talk about that at the end of how that's part of our option strategy to sell covered calls and then buy them back cheaper on our long positions. So just a quick reminder, if you would like to get real-time trade alerts on any of these trades that we make, when we enter a trade, when we exit a trade, any level of our Patreon, you'll get email notification as quickly as possible via our Patreon when we enter or exit a trade. Also, these trades then get automatically posted to a couple channels in our Discord that our Patreon members have access to. So there's several trade alerts channels. The Thinkorswim gets also automated price alerts from our Thinkorswim price alerts. So first they'll trigger in there. You can see the triggering of the UROI position from Thinkorswim. And then if we follow that up with a position, we'll post that in the Thinkorswim channel in our Discord. And if we just take a position, you can see where we went long SOXS. I posted that in the Trade Alerts channel. And again, our Patreon members have access to those alerts channels and will also get email notification. Again, I don't ever recommend anyone blindly follow us or anyone else into a trade, but if you would find it helpful to see what trades we're entering or exiting and why to help you learn and succeed in your trading, you can get those real-time alerts by joining any level of our Patreon. So now let's jump over to Webull and we'll take a look at the charts for those trades. So first, here's our trade in FANG-D. You can see, we had a position here around 31.34 when it spiked up and then rolled over. We stopped out of that. Again, they're viewing the FANG stocks as safe harbors, havens against what's going on in the banks, etc. So again, we got out of that pretty much break even. Then you can see FANG-D dramatically declined. And again, we're not terribly interested given that position in the FANGs that they're putting money into the FANG stocks just as a safe haven. Here's our position in SOXS. You can see here's an opportunity. Let me zoom this in a little bit further. As we got into SOXS on the 17th. So here's the 17th, and here was an example of rebalancing in these leveraged ETFs and why I like to be up early before the 4 a.m. Webull open. As you can see, that rebalance dropped it down near our price target, and we got in, along that support level there. You see it did dip down a little bit cheaper, so you could have gotten it cheaper at some point after we sent out the trade alert. So hopefully our Patreon members were able to take advantage of that alert and maybe even get in cheaper. And now you can see SOXS has run up a bit. So you can see I've got a stop sitting, essentially at break even, and then I've got a sell up at 44.13, which is just below a resistance level. Up higher, but we'll trail this stop with manually trail this stop with or trail this position with a stop limit and take our profit if hopefully they'll push tech down at some point, and we'll be able to get a nice profit in SOXS. Welcome Johnny Trades, Walter Lyons, thank you for joining us as well. Hope you all are doing well. So again, you see on the dip on Tesla, when it was declining, when I heard it was declining significantly, we looked at selling a put against Tesla. So again, we have a put at 120, and then Tesla bounced up. So we'll look at buying that put back, hopefully profitably. UROI, again, we've been watching UROI for it to hit around that 210 level. We had, buy orders sitting at that 210 level. So when they hit, I was happy with that level. It did dip down a little bit and then recovered and is now swinging back up. So again, if you didn't get into UROI, I know some of our BeachBum traders were already in UROI. It looks like, there may still be an opportunity, and this looks like a decent swing if the momentum in uranium continues. Yeah, there's news out on Walter sharing the news that UBS is purportedly rumored to have made an offer for Credit Suisse. There's lots of news, and we talked yesterday about all the issues with the bank collapse and strategies, how to not get trapped in this bank collapse. We'll talk about maybe a little bit more. Well, I know at the end I'm going to talk about some of the ETFs relative to the financial sector. Here's again our long position in yen. So when it declined, we bought back that covered call. When it swings back up, we'll look at selling that covered call again. So now we'll look at our real-time watch list for this week. What's on our top swing trading stocks to watch for this week? I don't have any specific lessons learned to share right now. We talked about the whole bank collapsing yesterday. So again, I'd recommend that you listen to those strategies. So first, I'll just go through what we've got. Are there any changes to our watch list for this week? And then we'll look at the charts. I added Disney to our watch list. Disney declined down to the low 90s. We may also look at selling a put against Disney and or go long shares in Disney. We'll look at that, somewhere around below the 90 level. DNN is another one of the uranium stocks that we picked out. Again, you can see why we picked DNN in the bonus video above. We've swung trade DNN profitably many times over the years, and it's approaching a nice support level. Talked about Grow. Grow's a dividend payer. It does have some exposure to cryptocurrency as well as gold. I'm not so sure about silver, etc. We saw how gold and silver have been on a run. The dividend isn't, huge, but we'll see in our dividend payers spreadsheet that along with the price appreciation, Grow is an attractive dividend payer as long as a potential swing trade candidate. So I'm going to take INDL off. INDL was the long on India. We'll see that it significantly broke down. We'll continue to track INDL through our ETF Google Sheet, and we'll see that there, but it kind of broke down through its current support. It would give a better risk reward profile at a lower support level anyway, so we'll keep an eye on it. I like the overall thesis, but given the current market environment, we'll just see where it bottoms and swings back up. METC is a coal stock, and we've seen the sector rotation in and out of coal. So like we did with uranium, I went through that same process in FinViz to look at various coal stocks that might be attractive to play that sector rotation. The one I found that I kind of liked the best was this METC. It does pay a quarterly dividend. I probably should do more due diligence into them, but I believe they looked like they were profitable. So it probably warrants more due diligence, but to play that coal sector rotation, here's a stock that you could use to play that rotation. See you guys sharing a lot of the news on UBS, Credit Suisse, all the banking news. Again, as we discussed yesterday, I expect that news, the banking news and sector, to dominate people's attention, at least for the beginning of the week, until we get into the Fed interest rate hike on Wednesday. So again, we'll talk more about the financial sector and our strategies or lack thereof towards the end. We've been watching Palladium, PALL. Again, it looks like it may be approaching its bottom again. I'm not terribly excited about that one because it's not optionable, but it does, have a long-term risk reward, and then there could be some opportunities there. Welcome, Roman Lubers. Thank you for joining us. Glad to see you in the live chat as well. Talked about SOXS. And we're taking that off our watch list as we're already long SOXS. We're going to take SPWR, which was our play on solar. You saw yesterday solar got hammered pretty hard. And SPWR broke down significantly. So we're going to take that off our watch list for now. Although, if we do see this sector rotation back into solar, that would be the one probably we would be looking for. Let me talk about UROI, USOI, and then we'll talk about the volatility stocks, the volatility ETFs, SVXY and UVXY. So again, we're already long UROI. And there's still an opportunity. If you're not long UROI, you might consider that. We're already long USOI. So again, on the significant decline in oil, again, there's potential opportunity. Again, there is some risk with the Credit Suisse stuff going on, but I would expect that those ETFs would probably be bought out as assets from whoever picks up Credit Suisse if that does occur. Oh, so let's talk about the volatility and our strategy with volatility. So you see I've got both UVXY, which is the long on volatility, and SVXY, which is the short on volatility on the VIX. And essentially I'm positioning so that I can take advantage of, whichever direction the volatility goes. So we did get a small spike on the banking turmoil, bank collapse. And so I put my buys back in on SVXY, and I'll show you where those are sitting. So if we do get a spike, a pop in the VIX up in the 30s, those buys will catch. This is, as you probably heard on my show with Money Mitch, this is probably my favorite trade because the VIX is pretty much defined to decline, which means SVXY would go up. So again, I've got buys sitting to catch any pop, any spike in the VIX with SVXY. If they do essentially spike the VIX down below 20, particularly before the Fed interest rate hike, I don't really expect that to occur. But if the interest rate hike is less than expected, they might spike the VIX back down below 20. 20 to 18 is a good level, and then I would look at going long UVXY. So this is a lesson learned, is have your trade plan in place that says, okay, if this event occurs, here's how I'm going to trade that event. If the converse of that event occurs, I can go the other direction in this way. So trading volatility, we're going to see what happens, and we've got, a way to trade either direction. So also, if I make any intra-week updates or intraday updates to this, as well as we have an automatically generated web page that also has price targets, also dividend information, ex-dividend, yield, optionality information that's available to all levels of our Patreon. So if you'd like to see interweek, interday updates to our watch list as well as price targets, etc., you can join any level of our Patreon. Also, again, if I make any changes after that page is generated, we post that in the Stocks Watchlist channel in our Discord that our Patreon members have access to. So you can see, when I found METC, I posted that with price targets in the Stock Watchlist channel. USOI, when oil significantly declined, we added USOI to our watch list. So again, if you'd like to see those more frequent updates to our watch list, any level of our Patreon will give you access to both that automatically generated web page and the Stocks Watch List channel in our Discord. So now let's go look at the charts for those items in the watch list. Let me grab a drink a second. Let me answer this question in a second, Roman, and I'll show you where you can see that in a sec. Just a quick reminder, we'll jump over to Webull in a second, but if you're not already using Webull, you can see that's our favorite trading platform. And if you're not using Webull already, you can open an account, get 2 free stocks worth $3,000 to $3,000. And if you fund your account with any amount, you can get up to 10 more free stocks worth up to $3,000. So again, as you can see from both parts of our game plan, we use it for our market analysis, our due diligence, most of our trading, etc. So before I get into the charts for our watch list, let me show Roman where you can find the answers to the odds for the Fed interest rate hikes. If you go to our webpage, beachbumtrading.com, bum without the U, and you go into trading tools and trading resources, you'll see the Fed Watch tool. There's the CME Fed Watch tool, and there's also the Fed monitoring tool as well. So I'll jump over there. I was going to do this yesterday, and it really, wasn't all that interesting, but just to show you how you can see as that percentage changes. So right now there's a 38% chance of a 0 and a 62% chance of a 25 basis point is the current probabilities now. My opinion, as I expressed yesterday, is that, again, my opinion is they're going to continue with a 25 basis point hike. So that's what I'm planning on. So again, as we talked about in terms of volatility, if they happen to go 0 because of the bank collapse and they justify going 0 because of that, I would expect, that to cause a significant drop in volatility. And then we would look at going long UVXY. If it comes out at 25, I can't imagine they're going to do 50, but even a 25 with the market leaning, 40% to a 0, the market might not like that, and they might spike the VIX. It'll hit our buys in SVXY. So again, that's how we're playing that Fed decision on Wednesday. It looks like I have to log back in. So just a second. Okay, so we'll look at the charts. So as you can see, Disney went into decline. Again, I'd like, Disney below 90, 85-ish would be ideal, but anywhere below 90 is pretty good. And again, we'll look at our puts also, and we may sell a cash secured put at 85, and then we might also buy shares if it does decline further. DNN, you can see ideally I'd like it around 91, anywhere about around $1 is pretty good. You can see it's pretty stable at $1, pop back up with the momentum in uranium late last week. So we'll see if we get a dip. I think that dip, it went to like 92. Yeah, it just missed. And I do have a buy sitting there, I think at 92 or 91. Grow. Again, investment company pays a small dividend. You can see it's, about a cent dividend. Ex-dividend date last was on 3/10. It's a monthly dividend. So the next ex-dividend will probably about April. Here's the coal play. So again, you can see around 802. This previous support, it's getting close to that. Again, if they continue to rotate out of coal, then we pick it up lower. When they rotate back into coal, might, swing back up. Same thing with palladium. Now, PALL is pretty volatile. You can see it's somewhat illiquid, pretty volatile. So I'd want to catch it down in this 125-ish area, 124 or so. And it's got plenty of upside up into the 280s. So we talked about the volatility, the VIX play. So UVXY, bottoms, the most recent bottoms about 435. See, with the VIX sitting around 25, it's kind of in between on both of these right now. But if they spike the VIX up, again, 4505 is the bottom. So again, it's got quite a ways to go into the 30s. The VIX got to go up into the 30s to get the SVXY to drop down in the 45. So I think my buys are sitting at 4502 or something like that. Maybe 4506. So again, that's our play on volatility. If they slam it down, 435-ish. If they slam it up, 4506 or so. So we'll talk about our bullpen stocks. Again, just a quick reminder, I put the banner up. We talked about the Fed interest rate probabilities. None of this is financial advice. These are my opinions. We're not financial advisors. None of this should be construed as financial advice. So the concept of our bullpen stocks are not ones that I watch real time, or in our automated systems aren't tracking these real time. I just go back and revisit them at the end of the day. Looks like they might have a setup in the near future that might be attractive. So I revisit them at the end of the day. If the setups improve, we put them in the game, move them up to our real-time watch list. If they break down or run away, then we just take them out of the bullpen and revisit them later. So we did have Intel in our bullpen for a while. It looked like it was bottomed. It does look like it bottomed and is already swung back up. So I'm going to take this off, even though they cut their dividend. It looks like it got the momentum in the overall semiconductor sector, primarily with NVIDIA and AMD. So they pushed Intel back up, and so I'm not going to chase it on the way up. If it comes back down, we can revisit. Again, we had moved UROI from the bullpen into the game, put it in the game on the 10th, and then we're now long UROI. The other uranium play that you'll see in our bonus video that we've been watching is UUUU, and its setup is not quite where I'd like it, but we've got it in the bullpen to keep an eye on it. So we can jump over to Webull and we'll see the chart for UUUU. So as you can see, ideally I like it, around this 469-ish level, which was the previous bottom. Again, it spiked down just like DNN and then swung back up towards the end of the week. So we'll see what the sector rotation with uranium does. Again, those are our top 3 picks for the sector. Again, as you can see in that bonus video. Okay, so we'll talk about ETFs, and then we'll look at a variety of ETFs in our Google Sheet, our ETF Google Sheet. And there's a couple of topics that I want to focus on. But if anyone in the chat has some other categories, topics, etc., that you'd like to specifically look at ETFs in our ETF Google Sheet, please throw those up in the chat. We can take a look at those. I'll let the sheet load a second. And then just a reminder, our All Access and VIP Patreons have access to our ETF Google Sheet, as well as you'll see, our dividend payers and our puts, return on invested capital, ROIC spreadsheet. So All Access or VIP levels of our Patreon have 24/7 access to this. So you'll see the price updates via Google Finance functions, and then also at the end of the day, we update them automatically via our automated systems. So a couple categories I wanted to talk about today, obviously with the bank collapse and all the focus on banks, there's a lot of focus on financial sector ETFs, and we'll take a look at a couple of those that we have traded successfully, profitably. And then also I just wanted to mention this, as I believe Easy Mike and other people yesterday mentioned this one, this is a bank sector ETF. It's not in our spreadsheet. If you are interested in this, again, you can click on the link in the notes. You can see, a dramatic decline with all the bank collapse issues. So again, that's a banking sector ETF. We're not interested in that, and again, not financial advice, but our position in all of these bank stocks, bank ETFs, is we're essentially going to stay away. Too much risk, too much volatility, too much risk of individual bank stock getting halted. You can get trapped in it if it gets halted, not be able to get out of your position. I do not know how that's going to affect some of these ETFs if they're holding one of these bank stocks where the bank goes under, collapses. Are they going to rebalance? Are they going to remove it? Is it going to go to zero? Again, in my humble opinion, we're not day traders. We're not, nimble type of traders, and I don't like the risk of getting trapped in any of those things. So we're going to stay away from the volatility. I expect a lot more news to come out, a lot of fear, and again, a lot of volatility in that sector, particularly early this week. So let's quickly, I'll jump over and we'll just show you the other ETFs that we have for the financial sector. Essentially, it's FAS, which is the long on the financial sector, and FAZ, which is the short on the financial sector. So here's the financials. Again, if you wanted to, again, I don't recommend it. I recommend against it, but if you want to long the financial sector, the bull 3X on financials is FAS. The short is FAZ. Again, you can see via our Google Sheet, these prices, low highs, etc., are updated near real time. You can see there's about a 20-minute delay with those Google Finance functions, but at least you can track the direction, the momentum. And then our automated systems update the support and resistance, bottom and top, which updates the risk and reward and the ratios at the end of each day. So again, if you're looking to play the financial sector, there's this other one. That's the XLF, which is the basic sector spider. So that's the base sector spiders, XLF, and the leveraged ETFs, Bull, FAS, Bear, FAZ. And then we talked about banking specifically, KBE. There are others, but those are the most common ones I've heard mentioned. So let me grab a drink a second, and then we'll look at gold and silver. I've gotten a lot of questions about ETFs to trade gold and silver, given the recent run up in gold and silver. So we'll take a look at the various ETFs that you can trade gold and silver. Okay, so there's a variety of ETFs with which you can trade gold and silver. I apologize if you can hear my little boy treasure hunting in the background. He's bringing me a prize. So again, our favorite in terms of trading gold is if you're going to day trade it, short-term trade gold, we typically use GDXU, which is a broad gold miners 3X leverage ETF. If you're looking at a long-term hold in gold, we have a sizable position in GLDI. Again, this is a Credit Suisse ETN, monthly paying, dividend paying ETN. It is a Credit Suisse, so again, take that risk into account, but it does pay a very nice dividend on a monthly basis. There's also some other gold miner ETFs, JNUG, JNUG's a popular one. And again, by using our ETF spreadsheet, you can see the risk reward profiles, in near real time for these various gold ETFs. You can see there's a double long, there's an ultra short, So again, I would recommend using our ETF spreadsheet to find the one that meets your risk reward profile and, the direction you want to trade up, trade down. Again, there's several shorts. If gold gets, above 2,000 near that 2,100 level, we may be looking at exiting our GLDI position. Same way with silver. The ones in yellow here are ones that are not in our database, so they're not automatically updated. I would have to manually update the support and resistance because again, their risk reward profile is not as attractive as some of the others we have in our database. So again, our favorites for trading gold long, GDXU, GLDI. Again, some people like JNUG. Shorting, some people like Dust. Look at silver. So again, our favorite for trading silver long, short-term day trading, AGQ, which is again 2x long on silver. Long-term trade, again, a Credit Suisse ETN, pays a very nice monthly dividend. We have a sizable position in SLVO. And again, if silver makes it up near the $30 mark, again, or our position becomes profitable and there's significant risk with the Credit Suisse situation, we might exit our SLVO position. ZSL would be a short. So again, if you're trying to day trade, short-term trade silver, AGQ, ZSL, again, it's a minus 2x silver with ZSL, and you can see that's showing somewhat attractive right now. So, and again, you can see, all the gold and silver ETFs in our ETF spreadsheet. So again, that's what I would recommend. I keep getting these questions about, what gold ETF should you use to trade. Now, again, I think it's a little late for a long-term getting on the boat with gold long-term. I think it's, it's already started its run, and we may be looking at exiting when it peaks and rolls over. But shorter term trading, if you want to do that, we've made money with GDXU and AGQ in the past. So I hope that helps. Okay, if no one else has any other questions or topics you want to look at, ETFs, I'll spin through them real quick. We'll just take a quick look through some others. We talked about financials, gold, silver. The ones in green, as you'll see, are showing a risk-reward profile greater than 2 across all the categories. So we do have another coal in here, NC, so another way to play coal. You'll see all the indices up and down. You can find the up and down ETFs for all the indices in our spreadsheet as well. SPANG D, FANG U. Again, we're going to stay away from FANG-D until things stabilize. Talked about India, INDL. So you can see that's not showing as attractive anymore. I lowered the support level. Again, if there's TQQQ, SQQQ if you want to play long or short on the NASDAQ. We've got all the ways to play oil. Typically we play gush and drip, but you can play long UCO, short SCO. Same way with natural gas, boil and cold. Currently we're long boil, but again, if you want to day trade natural gas, boil long, cold short. Talked about real estate. Easy Mike was mentioning DRV yesterday, so you can see the risk reward profile currently on DRV. We also have DRN, so DRV is the bear on real estate, DRN is the long on real estate. Talked about SOXS. We're already long SOXS. You can see the price targets, the risk reward profile on SOXS. There's also this other one, SSG. Treasuries, we're currently long TMF, selling and buying back covered calls on TMF. And we talked about the volatility, UVXY, SVXY. You can also see SVIX, VXX. So again, if you prefer one of those, but you can compare the risk reward profiles again using our Google Sheet. So we hope that that all helps. Okay. So let's talk about the shopping list stocks. Again, we may see a lot of volatility, a lot of fear in the markets with this bank collapse. If there's something that you have always wanted to own, that's what we consider our shopping list stock, something we've always wanted to buy, waiting for an opportunity when they're irrationally cheap. And that's your shopping list, and be ready to jump when the opportunity presents itself. However, again, as we've talked, you don't want to get trapped in this bank collapse. So again, as we talked yesterday, of not only the direct risk, but also the indirect risk, the domino effect from this bank collapse. We don't want to see anyone get trapped. We don't want to see anyone get hurt in this bank collapse. So make sure the stocks you're considering are not going to be at risk due to the bank collapse, the domino effect from the bank collapse. You can listen to, again, more about our strategy in part 1. We also released a separate video last week's strategies relative to Silicon Valley Bank fallout, the Silvergate fallout, etc. Also, with rising interest rates, zombie stocks are even at higher risk. So stay away from zombie stocks, zombie ETFs. We still have high inflation. So make sure your stocks are inflation proof. And we're going to have, in my humble opinion, again, we're going to have increasing interest rates. So make sure that the stocks that you're buying are proof against rising interest rates. And recession proof. There's more and more talk now that this bank collapse may throw the economy into a recession. I've even seen comments worse. So better safe than sorry. Make sure that your portfolio is going to be recession proof if we do end up in a recession. So now we'll talk about our trade ideas, our other strategies. Since this market's been choppy, hasn't really picked a direction, not trending up or down, a lot of chop. We talked about, the expanding bars, increased volatility. Two of the strategies that we've been using is piling up on dividend payer stocks so we can make money while we wait for the markets to pick a direction, trend, etc., or recover. So we created a spreadsheet of dividend payers that gets automatically updated again with our other spreadsheets. At the end of the day, this gets updated with the data for our from our database of dividend payers. So again, our all access and VIP Patreons have access to this dividend payer spreadsheet all the time. I left in the notes kind of the evolution and definition of what's green, if it's within 10% of support, etc. If it's not giving at least a 5%, then you're not beating the Fed interest rate or the current Treasury rates. And if they've stopped paying dividends, then it shows up in red. And if you want to request us to add or do the research to add any dividend payer, you can put that in the Discord, etc. And if you'd like to see the evolution of how we've developed this dividend payer spreadsheet, what everything means, etc., some visiting other dividend payers. We have a whole series, how to find the best dividend payer stocks. You can find that on our channel, and also links to those in our notes here, and also bonus links to bonus videos that we haven't released yet on how to find the best dividend paying stock. So it shows you, our previous discussions of the dividend payers and how that's evolved, how to use that dividend payers Google Sheet. Also, it looks like this dividend hike Twitter account is active again, and we have an automated feed for dividend hikes now in the investing channel in our Discord. So again, our Discord's free to join. You can find a link to our Discord in the description box below. And then you can get access to, all the different types of trading, etc. And again, in the investing channel, we have this feed from dividend hikes. So you'll see as various companies hike their dividends, that will get automatically posted in our Discord. So again, free to join our Discord. You can find an invite in the description box below. So I'll just quickly whip through our dividend payers. Actually, I'm going to answer this question let me come back to that. Okay, John? I'll put that in our questions, and I'll talk about forward at the end. Okay, so just to show you, you can use this again, use these Google Finance functions, and also updates end of day from our database to get support resistance. And then it uses that support resistance to calculate adjusted yield. So it shows their dividend, when their next dividend date is, their defined yield, which is the yield of the dividend relative to the stock price. And then we look at price appreciation and consider that in the adjusted yield. And then, anybody who's close to support level, candidate buy will show up in green. So again, you can use this to find dividend payers that might be attractive. FCAP is a regional bank. I would stay away from that. You see GLDI we own is attractive. You can see GROW that we have on our watch list. It was interesting, IBM is showing up. It's one of the dividend aristocrats. A lot of people like JEPQ, JEPI. We own a chunk of land, which is farmland. LTC we've owned before. It's a medical property REIT. MPW is another medical property hospital REIT. We own a chunk of that. We've been watching O, which is another real estate. We own a chunk of OPP, which is another REIT. Actually, I think that's the bond, a fixed income bond fund. So again, just to show you how you can use our dividend payer spreadsheet. to find a dividend payer that you can see the frequency. So USOI, again, attractive. So you can see the frequency. You can set up, when they're paying, etc., and generate your own income stream from dividend payers that meets whatever your needs are and your risk reward profile, etc. If you want price appreciation or you want high dividend, you can use our dividend payers Google sheet to identify the ones that might be of interest to you. So we hope that all helps. And again, if you're all access or VIP Patreon member, you can access that at any time. So again, we hope that adds value and helps. Similarly, we talked about we've got, our option strategy primarily is selling covered calls against our position, buying them back cheaper when the stock goes up, selling puts when the stock goes down, and then buying them back when it comes up. And we've created another spreadsheet to identify opportunities to sell puts. So our puts ROIC Google sheet is a way for us to identify potential candidates. In our case, we're selling cash secured puts because we're doing the majority of our trading in a retirement account, so they have to be cash secured. But again, when stocks are declining and we have idle cash, this is a way to put our idle cash to work, get paid while we wait for the markets to trend. And this Google sheet allows us to identify potential candidates for selling puts against. Again, I've debated about removing all the previous notes on the criteria of how we develop this, how it could be used. I'd love your all feedback. If you'd like us to remove this, or if you find all these notes helpful, please let us know, and I can adjust accordingly. Also, if you'd like to request us to run research, run our automation against a put, let us know in the Discord, and you can see the evolution of these option strategies via our series, Option Strategies for Beginners. You can find links to those videos in the notes, as well as in our options playlist and just on our channel. So we continue to develop and release various videos on our option strategies under that Option Strategies for Beginners. So more coming soon. So we didn't do a whole lot of changes to this week. As we mentioned, we did sell cash secured put against Tesla at 120. We're looking at a potential selling a Disney at 85. You can see we've already sold a Micron at 50, so we'll be looking to potentially buy that back cheaper. Same way with the Tesla. You could see I'm looking for something that's over $1. We recently added the calculation of fair value, so you can see what that is. So again, it looks like Disney might be a decent candidate. I'm not so sure about Match, and also I saw some news about Moderna that I would want to dig into more detail before selling a cash secured put against Moderna. Again, if you'd like us to consider something else, we can add it and do the research, etc. Ones we've looked at that aren't really on our watch list right now, but I can quickly whip through these and see if anybody else looks attractive. And again, this is using the Google Finance functions and automatic updates from our database. So again, at the end of the day, or even during the day, if I hear something's moving up or down, I can see, okay, Google was moving up, so I didn't want to sell then. Disney's moving down, shows up green. See it's over $1, so hey, I might want to consider selling that on Google. So again, our all access and VIP Patreons have access to this all the time. So you can use this to identify opportunities to sell puts using our puts ROIC spreadsheet. So I hope that helps. Okay, so let me answer those questions. I've got MD asking about Palantir and John asking about Ford. what do I think about Ford? Actually, we have Ford on one of our backup watch lists. It's one I look at the end of the day, pretty much every day. We'll look at it in FinViz real quick. Just another reminder, you can find, all these tools we use in the link section on our homepage. Again, beachbumtrading.com, bum without the U. So I can get to FinViz very quickly, look at Ford. Okay, well, so it's kind of sitting in the middle. I would want Ford 10 or below. At that support level, it looks like it's in a narrowing channel. There's some negativity with auto sales. Their EVs are doing pretty well. Again, it's been pretty flat, pretty stable at that support level. Again, I'd want it around 10. And I don't expect it to really go anywhere anytime soon. Does pay a 5% dividend, so that's okay. So again, I don't have a, right now it's sitting in the middle of its channel. I'd want it down around 10 or so before I'd look at a buy in Ford. Again, auto sales, recession, increased loan rates, loan defaults. So there's a lot of, issues. I'm not chasing it. If it gets down to 10, that might be attractive. And then you've got some upside into the 20s for a very long term, downside all the way down to 5. There was a time I wish I'd got it down at 5. We got GE down about 5, made some good money. And I missed Ford at that time. So it's one of the reasons I'm watching it. Palantir, again, you've got a pivot point around, 750, 760, upside, maybe 11, resistance level. So, maybe 50% upside, and you've got, downside down to 6. They're losing a lot of money. I don't like it. So, like I said, they're losing a lot of money. Also, there's some discrepancy in shares. This is, I believe, a former. No, they did a direct offering. It wasn't a SPAC. Very negative sentiment. I could do more due diligence on Palantir if you'd like. If anyone's interested in that, and or Ford. Again, if you're interested in a deeper due diligence, I can try to get around to that. But again, I'm not excited about either one of them. And I would stay away from Palantir given the amount of money they're losing at this time. The economic situation doesn't bode well for that. But again, it may warrant more due diligence. So I'm going to wrap up real quickly. If anyone has any further questions, please feel free to tag us in the Discord with your questions. Be happy to try to address them, quickly as I'm able. Again, just tag us in the Discord so I'm notified of your question. Again, we'd highly recommend everyone join our Discord. We've got a great community of fellow BeachBum traders that help each other out. So if I can't answer your question, then maybe someone else can answer your question as well. Again, got a very helpful community. We also have a Facebook group if you would prefer that medium, and you can always direct message us and contact us via our social media links. All our social media links are on our homepage as well, beachbumtrading.com, bum without the U. So thank you again all for joining us. Again, if you have any further questions, you can also put them in the comments below this video. And we hope that you have a great trading week, March 20th through 24th. And we hope you'll come back next weekend. We hope you'll subscribe to our channel. We will be releasing further videos throughout the week. So subscribe to our channel, hit the bell icon so you're notified when we release subsequent videos. And hopefully we'll see you all back next weekend. Good luck and have a great trading week. Bye.